Is here with us in the studio. And Marcus, first up, strong American growth figures are helping the stock markets move higher.
Yes, we're going to start with what I suppose you could call the figures of the day. The recovery in the US economy is on track indeed. The American economy grew by 3.2% during the fourth quarter of 2013 in comparison to the last 3 months of 2012. That may be slower than in the third quarter, but it is still stronger than expected. There was a government shutdown at the start of October, for instance, and there were fears of that weighing on growth. That didn't happen, though, as well, this figure came in stronger than expected. Because of the data, we're seeing an upbeat mood on Wall Street, as you were saying, Laura, and all three main indices in the United States, they're in the green this hour. The Nasdaq in particular is roaring ahead, and we're going to tell you why in just a moment. Let's first show you the European close, though. It was a little bit more of a big mixed bag this side of the Atlantic, with the FTSE in London losing some steam. Shares in spirits maker Diageo led the fall in London as it announced weakness in emerging markets, and it said that is hurting sales. Looking then at why the Nasdaq in particular is trading higher, shares in Facebook, they are soaring after stronger than expected results for the fourth quarter. It comes as the social network giant says more than half of its advertising revenues comes from mobile. It's seen as a milestone as investors, they've been worrying about Facebook's viability on mobile devices. Looking at some other shares, shares in Google, they're higher after it announced the sale of mobile phone maker Motorola Mobility. The Chinese company Lenovo is the buyer in a deal valued at $2.9 billion. Google bought Motorola Mobility 2 years ago for $12.4 billion. Despite the much lower sale price, investors, they appear to be welcoming this sale. Google keeps many of Motorola's patents, and the deal also allows Google to focus on software and perhaps look away from hardware and mobile phones, where Motorola has been subjected to tough competition from the likes of Samsung and Apple. Now, the US growth figures are overshadowing fears in the past few days over emerging market currencies, and we're seeing currencies like the South African rand and the Russian ruble rebound somewhat this session. Still, though, concerns over these currencies remain, and the Turkish lira in particular has attracted attention because of political turmoil in the country. This hour, the lira is losing ground against the dollar once again. Emerging market currencies, they're also under pressure as growth in developing countries appear to be coming down. Earlier, I spoke to foreign exchange strategist Christian Lawrence at Rabobank in London. He says that the fall of emerging market currencies is a sign that developed markets are strengthening and gaining momentum.
This largely started when Fed Chairman Bernanke suggested that the US might start to slow the pace of their quantitative easing, i.e. monetary policy stimulus, whereby they were pumping extra dollars into the global economy. Now, a lot of those dollars actually ended up in the emerging markets. So we saw a lot of foreign money flowing into these emerging markets, particularly the government bond markets. But when Bernanke suggested that the US may stop printing so much in the way of dollars, we suddenly saw a reversal of these flows. US yields started to rise, and all of a sudden, the US looked like a more attractive place to put your money.
That was Christian Lawrence there speaking to me from London earlier. Here's another company in the spotlight this session. Shares in Nintendo lost more than 4% in Tokyo earlier. The creator of Super Mario Bros. Is under pressure to revive sales, but the president of this company says that he's not willing to change direction dramatically. Delana D'Souza has more.
The games will continue according to Nintendo's president. Satoru Iwata has refused changing the company's direction away from consoles. Despite weak demand, console prices will not be slashed. Instead, executive pay will be cut. The company has been criticized for failing to incorporate smartphones and tablets into its business. One analyst, however, feels differently.
Nintendo is in a really difficult position right now. So I think that by putting their games on smartphones, for example, this is probably the biggest piece of advice that many people are giving the company at the moment. I think that this would ultimately kill Nintendo.
Nintendo faces criticism for limited game selection compared with rival Sony's PS4 and Microsoft's Xbox. The maker of iconic games such as Super Mario and Donkey Kong has so far resisted licensing games for use on mobile apps. Gamers themselves are split.
I don't think they should get into smartphones. When I like a game, I buy the console made for the game. It's not something I economize on.
Games on smartphones are developing more and more. And what Nintendo's doing, well, people are using consoles less.
The $44 billion video games market has faced tough competition from cheap games downloaded onto smartphones and tablets. Nintendo also announced initial plans to enter the healthcare industry.
Okay, it's not game over just yet for Nintendo by the looks of it. With that, I'm going to send it back to you, Laura, for the rest of the news.
Thank you very much indeed, Marcus, and we will see you again in an hour for an update.